stocks recover after a sharp drop at start as silver linings from US tariffs emerge even as uncertainties about future linger. Pharma and utilities are the big gainers while IT is a big drag. US President Donald Trump slaps hefty tariffs of up to 50% on trading partners, disrupting the world trade order. Economists expect this to dent the global growth, fuel inflation, and roil the markets. Exports from India will attract a high reciprocal tariff of 27%, but less than imposed on China, Vietnam, Indonesia, and Bangladesh. This can boost textile and electronic exports, even as drug makers cheer being excluded from tariff ambit. India government in a huddle post Trump's reciprocal tariff announcement. Sources say meeting is underway to discuss the impact and assess India's strategy. The government is not in favor of any knee-jerk reaction. Experts are aghast at Donald Trump's method of tariff computation that ignores real tariffs and expenses trade surpluses as a percentage of exports. Some, like India, gain from the novel formula. An RBI letter to Bajaj Finance expresses its displeasure over lapses in maintaining and managing data of co-branded credit card customers. It directs lenders to take corrective steps. Bajaj Finance is yet to respond to CNBC-TV18's query. Hello, good afternoon. You've tuned into CNBC TV18, watching Business Lunch with me, Vinny Motiwala, coming live from the CNBC TV18 Motilal Oswal studios. Thank you so much, as always, for tuning in. While obviously we did see a bit of a red start coming in for the Indian markets, a sharper red start, now we've started seeing that recovery coming in. And as of now, 23,200 levels is what the Nifty has managed to hold on to, post the 10 o'clock time period that we're seeing coming in. So, people were understanding what actually happened on the tariff front, who would be benefiting, who would see a bit of a negative impact. Mid-caps, that's an interesting one. While it went up in the green, it came down again, but recovered from the day's lowest point. So as of now, it's down 0.4%. Small cap managing to hold on to some bit of that flip-flop between the red and the green, but not much of a sharper decline that we're seeing coming in for the Nifty small cap. Banks, that's seen a sharp recovery in today's trading session. From the red, it's moved to the green, managing to hold on to that. And at the day's highest point, even as of now, 51,470 levels is what the Nifty bank is at. Top sectoral gainer today, the one that opened with a bang, was Nifty Pharma, because it was the pharma play was exempted from those Trump tariffs, and they were cheering that. So Nifty Pharma opened up with gains of almost 4-5% in today's trading session, now holding on to gains of 2.3%. So that's also settling down. PSU Banks is another one that saw good recovery coming in today's trading session, up almost 1%. Now the big drag today was the Nifty IT that felt a bit of a brunt coming in down, and as of now trading at the day's lowest point. Nifty IT is down 4.3%. So surely keep an eye out on that and where that is going to be headed. A lot of other stocks, individual stocks, are moving on the back of these Trump tariff issues. But we'll take you all through that a bit later. But first, let's go across to what's actually coming on that front. Now, US President Donald Trump had announced his tariff strategy last night. A baseline tariff of 10% on all countries will be effective from the 5th of April, while the discounted reciprocal tariff will come into effect from 9th of April. President Trump also said that the US will charge an import duty of 27% on India and 34% on China. A 25% tariff is being announced on automobile imports and auto parts, while the previously worried pharma sector that remained exempted from now, bringing in some sigh of relief in terms of the move that we saw. For drug makers also, we saw a bit of a move coming in, but let's listen in to his comments and what he had to say.
For these reasons, starting tomorrow, the United States will implement reciprocal tariffs on other nations. It's been a long time since we even thought of that. We used to think about it a lot. We didn't think about it for many decades, and you see what's happened. For nations that treat us badly, we will calculate the combined rate of all their tariffs, non-monetary barriers, and other forms of cheating. And because we are being very kind, we're kind people, very kind. but we will charge them approximately half of what they are and have been charging us. So the tariffs will be not a full reciprocal. I could have done that, yes, but it would have been tough for a lot of countries who didn't want to do that. So if you look at that, China, first row, China, 67%. That's tariffs charged to the USA, including currency manipulation and trade barriers. And so we're going to be charging a discounted reciprocal tariff of 34%. I think, in other words, they charge us, we charge them less. So how can anybody be upset? They will be, because we never charge anybody anything. But now we're going to charge. You know, you think of European Union, very friendly. They rip us off. It's so sad to see. It's so pathetic. 39%, we're going to charge them 20%. So we're charging them essentially half.
Okay. The likely effects of this reciprocal tariffs could begin a trade war or a rearrangement in the global trading mechanism. But how does it play out domestically in the US? We have CNBC's Steve Leisman, who's joining in with us, and to help us understand the tariff effect on the US economy.
I think it's worse. I don't know what the average tariff is. Maybe we could just pull up. I asked them to make a board on Canada, the EU, Mexico, and China. Those are the principal sources of our imports. So that's the stuff that matters. I think it's over 20%, if I'm not mistaken. So a good chunk of all of our imports will have a tariff over 20%, I believe. And by the way, yeah, you see that big one on China, which I think is actually 54 because it's 34, I believe, plus 20. In any event, people modeled in 20%, and they were detracting from GDP. They were adding to the CPI. This just seems like the president having his own sort of school of economics that's different from everybody else. And he said that the economists were all wrong, but in fact, they would insist they were absolutely right. Here's a comment from the Cato Institute, which, as you know, is very conservative. They said, quote, "These so-called reciprocal tariffs don't mirror foreign trade barriers and ignore those imposed by the United States. For all of President Trump's talk of a new golden age, this huge tax increase will inevitably result in higher prices for American families, lower growth and business investment, and diminished exports and manufacturing output." So it is not a good forecast or a good look from the economists and the forecasters. And as you can see from Wall Street on these tariffs here, the president believes this will lead to a golden age of growth and increase in manufacturing. Economists believe it will lead to lower growth and higher inflation, and really puts the Fed in a pickle here. You can see that there was something of a bump, however, in the probabilities of Fed rate cuts, and I think that comes from a view of greater economic weakness, and they believe that it will be so great, I think, that the Fed will be forced to ignore the surge in inflation. There are the probabilities a touch higher than they have been. That December number for the third cut had been as low as 60, even 50%. But now that he's very serious about these tariffs, you have the market saying, hey, the Fed's going to cut 3 times because I believe not that the inflation is going to be low, but that the economy is going to be that bad.
Thank you so much for that. Now let's move on. The U.S. trading partner countries reacted to the tariff announcement and vowed swift retribution. Now here is what the world leaders and top government officials had to say on the announcements.
President Trump's announcement of universal tariffs on the whole world, including the European Union, is a major blow to the world economy. I deeply regret this choice. Let's be clear-eyed about the immense consequences. The global economy will massively suffer. Uncertainty will spiral and trigger the rise of further protectionism. The tariffs will also hurt consumers around the world. It will be felt immediately. Millions of citizens will face higher grocery bills. Medication will cost more, as well as transportation. Inflation will go up. And this is hurting in particular the most vulnerable citizens.
We're in a situation where there is going to be an impact on the U.S. economy, which will build with time. In our judgment, it will be negative on the U.S. economy. That will have an impact on us. But the series of measures will directly affect millions of Canadians. We are going to fight these tariffs with countermeasures. We are going to protect our workers, and we are going to build the strongest economy in the G7. In a crisis, it's important to come together, and it's essential to act with purpose and with force, and that's what we will do.
Following this announcement, we have once again conveyed to the U.S. government that the recent measures are extremely regrettable and have strongly requested that they be reconsidered. We believe that the recent measures and other broad trade restrictions imposed by the U.S. government could have a significant impact on economic relations between Japan and the U.S., and ultimately on the global economy and the multilateral trading system as a whole.
The unilateral action that the Trump administration has taken today against every nation in the world does not come as a surprise. For Australia, these tariffs are not unexpected, but let me be clear, they are totally unwarranted. President Trump referred to reciprocal tariffs. A reciprocal tariff would be 0, not 10%. The administration's tariffs have no basis in logic, and they go against the basis of our two nations partnership. This is not the act of a friend. Today's decision will add to uncertainty in the global economy, and it will push up costs for American households. This is why our government will not be seeking to impose reciprocal tariffs.
Okay, on that note, it's time for a very short break. But after the break, we'll get you more updates on Trump tariffs plans and its impact on India's various sectors. Welcome back to Business Lunch on CNBC-TV18. Now, let's move on and talk a bit more in terms of the Trump tariffs. US President Donald Trump announced that long-awaited Liberation Day reciprocal tariffs, and global markets shifted into a risk-off mode. Hormaz is able to take us through what Trump has announced and the impact on India and various sectors as well. Hormaz.
Far-reaching effects of Donald Trump's tariff announcements. We'll start off with the broader announcements first. The 10% base tariff line that has been imposed by the US president, that will be applicable from Saturday midnight, and additional duties on 60 countries that also includes India, China, Vietnam. But of course, interestingly, Canada and Mexico, which were the first countries where Trump had imposed tariffs after taking office, they have been exempt from any further reciprocal tariffs as well. Now, when do these take effect? As I said, the 10% that takes effect midnight Saturday, and the additional duties, they take effect on 12:01 a.m. on the 9th of April. Now, when it comes to the Indian context, 27% reciprocal tariffs. Of course, there was some back and forth between 26 and 27. It's a 27% reciprocal tariff that has been imposed. And Donald Trump also mentioned that Prime Minister Modi is a great friend, but he told him that India does not treat the US right when it comes to trade, and hence they are imposing these reciprocal tariffs. And as a result of which the global market shifted into risk-off mode. The Nasdaq futures fell very sharply. The risks of US recession have risen, and as a result of which IT stocks in today's trading session are taking it on the chin, particularly the mid-cap IT names, be it the likes of Persistent Systems, Coforge, KPIT Technologies, all of them seeing losses of anywhere between 8 to 10% in today's session. A winner that has emerged from this is Pharma, because Pharma as a sector has been exempt from tariffs as of now, because there will be investigations that will be held on the pharma sector and semiconductors as well. And if there is a conclusion that is arrived on, there may be a tariff imposition in a future date, which is not clear, of course. But for now, Pharma is a definite winner in today's trading session. The Nifty Pharma up 2.5%. And another potential winner, though, are the apparel and export manufacturers. And look at Gokaldas Exports, Arvind, Raymond, all of them seeing good gains, not because they've been exempt from tariffs, but that's because other competitive countries, be it Vietnam, be it China, they've been taxed more in comparison to India, and that gives India a competitive advantage, and as a result of which you can see the impact on these names. We even in fact spoke to the management of Arvind earlier in the day, and they mentioned that they are now looking forward to the bilateral trade agreements. They're expecting such with countries like the US and the UK as well, and this will make it more exciting for the Indian textile industry. And going forward, they are looking at a holistic approach approach for the Western markets. So some winners, some losers, but for now the markets in India in particular have been fairly resilient to these tariff announcements.
Absolutely, Urma. Thank you so much for rounding that up so well for us. But now let's get to some reactions also coming in. And first, from the government side, we have the Ministry of State and for Finance, Pankaj Chaudhary. He says that India will revive from the reciprocal tariffs imposed by President Trump last night. Listen in.
देखिए यूएस का काम है, उनका अमेरिका फर्स्ट है, ट्रम्प साहब का, तो मोदी जी के लिए इंडिया फर्स्ट है. अब उसकी हम लोग समीक्षा करेंगे, फिर क्या उसका असर पड़ेगा, कैसे उससे निपटना देखा जाए.
We also got in touch with former Joint Secretary of Economic Affairs, Gemini Bhagwati, former Finance Secretary, also SS Garg, and former CBEC Chairman Najib Shah to understand how Indian industry could cope with the impact of Trump's tariffs. Listen into what they had to say.
The ASEAN countries are physically closer to China. They have large volumes of trade with China, but they are strategically closer to the US. Larger ASEAN countries like Malaysia, etc., Thailand, they may gravitate towards China in terms of looking for ways in which they can meet market demand in China on some preferential basis. And the Chinese, given the size of their economy, will look to provide some kind of alternative to the US. So that is more likely than India immediately replacing Vietnam or Malaysia or Thailand as a place where manufacturing will quickly shift. I don't see that we will become a world leader in terms of a trading nation.
In automobiles 20 years, 30 years back, we perhaps needed some protection. But today, compare the prices of a Tesla being manufactured in America or Tesla being manufactured here. It makes hardly any difference in cost because so much of automation, robotics and other things have taken place that in automobiles, the labor advantage is completely gone. Even today in EVs, etc., many of the components, engines and others, you are in any case importing. So I don't really see any threat if you reduce the 60% tariff to 10% on automobiles. I think we need to get out of this unnecessarily overprotective mindset.
I think we need to focus on specific commodities where we believe we need to export and not lose our export share. So which means if, for instance, take for instance engineering goods and engineering products. If we believe that that is a market we don't want to lose, we should, if necessary, reduce the tariffs on that specific commodity. Go tariff by tariff, commodity by commodity, rather than look at an overall reduction, because I don't believe that we should violate our MFN principle. We should ensure that whatever we agree to reduce for US is applicable to imports for all countries and negotiate accordingly with the US. That's the only way I think we should go forward, and our exporters need to brace up for challenges.
Earlier, we spoke to Ed Yardeni, President at Yardeni Research, and James Knightley of ING to understand the impact of Trump's reciprocal tariff. Listen to what they had to say.
Talking about 25% permanent tariffs on steel, aluminum, and autos. And I think this has the potential to bring inflation back in a serious way in coming months. And if that's the case, I think that has the potential to really depress the consumer. And this time around, the Fed is not going to be able to come to the rescue here because it can't possibly lower interest rates when inflation is significantly above its 2% target. I think that inflation, which has been running around 2 to 3%, is about to run at 3 to 4%. I think the Republicans are running the risk of losing their majority in both houses of Congress next year. I think this is just a disastrous policy.
What we've got is it's basically looking at the ratio of exports to the US divided by the trade balance. And if you run through that and look at all the countries, that is exactly what they've done. These aren't a scientific calculation of all the trade tariffs and all the barriers at all. It's basically, it's seemingly somewhat of a fabricated number. So I think that there could be some reasonable scope for some renegotiations here, as a lot of countries make the point that these numbers do not match up with reality.
Earlier, we also spoke to Sandeep Bhatia, Managing Director and Head of Equity India at Macquarie Capital, and he had highlighted on this front as well that Trump administration was not immune to internal politics pressure as well. Listen in to what he had to say.
The Trump administration not immune to domestic internal U.S. political pressures and requirements, and the pharma business is definitely integrated into the entire medical healthcare system in the U.S. So we remain positive on pharma. We like Sun Pharma. And this is, I think, an indication of what should be taken as a broader message, is that the tariffs that have just been announced are opening move, and there could be negotiations. India is already in bilateral trade agreement negotiations, and we could see changes in the tariffs for India and even for some other countries.
We also spoke to Nilesh Shah, Managing Director at Kotak Mahindra AMC, and Neelkanth Mishra of Axis Capital, who gave their reactions to Trump tariff orders as well. Listen in.
President Trump has proven Sant Tulsidas correct. Sant Tulsidas wrote centuries ago, Samrat ko nahi dos kosai. And President Trump is proving that for weaker nations, WTO is there. For stronger nations, WTO doesn't matter. In fact, he has historically coined new definition of import duty, which is your trade surplus with US divided by your exports to US. That is called import duty. I'm sure we are going to see one Ivy League case study on this new definition. President Trump has not finished. He will continue to make announcements. And it is up to India as to how we leverage this.
The $700 billion odd of extra revenue that on an annualized level the US will start now to collect is about 0.6% of global GDP. So this is effectively fiscal tightening for the world.
Okay, on that note, we're going to slip into a very short break, and we'll come back with more news and updates after this break. Welcome back to Business Lunch on CNBC-TV18. A quick look at what the market is doing as of now, holding on to that 0.3% of decline that we've seen recovered from the day's lowest point is what the Nifty is doing. Let's pull up some of these names that are coming in. We have Vardhaman Textile from the textile side. So Vardhaman Textile, KPR Mills, Trident Limited, all of these from the textile side are managing to hold on to very, very strong gains. So that is something interesting to watch out for. Other than that, obviously, we have Bharat Dynamics that's buzzing in trade today as well, holding on to gains of almost more than 5%. So interesting to watch out for that. AU Small Finance Bank in terms of the update that came in from the company. So keep an eye out on that front as well in terms of the update for Q4. As of now, stock holding on to gains of 3.8%. But with that, we'll wind down this edition of Business Lunch on CNBC-TV18. Thank you so much for tuning in. Up next, your Midcap Radar.
With the baton of power set to shift, Bharat's youth will drive the next wave of change. The biggest leaders and policymakers, global trendsetters, business icons, and entrepreneurs will come together to inspire the next generation of change makers. Don't miss your chance to witness it all live. Rising Bharat Summit 2025.